Okay, good afternoon, ladies and gentlemen. It's 12:05. Welcome to the Com Summit in association with Saascoms. My name is Gerard Dugdale. I'm the Publishing Director of Credit Today. This is a follow-on event from a previous webinar summit that we did also with Saascoms about 18 months ago. So that we are coming in mainly from the perspective of the credit and consumer collections industries, but we are just going to widen the angle a little bit for this discussion to take on board more general retail and economic considerations. Just a quick word of thanks here to two organisations that have helped superbly to put this event together. That's Nuddy Media and Adventure Websites. So thanks for those contributions. I'm now just going to quickly introduce the panelists. This is roughly in alphabetical order. From the Credit Services Association, we are delighted to have Claire Ainsley, who's Head of Membership and Compliance. She's joined by Russell Collins, who is Risk and Standards Compliance Manager. Then we have two professors. We have Professor David Coleman, the Emeritus Professor of Demography at Oxford University. He's also a former government special advisor. And we have Associate Professor Jonathan Reynolds in Retail Marketing and Deputy Dean at the University of Oxford's Said Business School. He's also Academic Director of the Oxford Institute of Retail Management. And last but not least, we have Mr. Paul Neild, who is the Director of Saascoms, who's our sponsoring firm today. So first of all, I'm going to go to you, sir, and Professor Coleman. Just talking about the demographics of the nation, you made an interesting point that said that we have a slightly messy demographic situation at the moment. Could you just expand on that, please, and in terms of the potential impact for the conversation to follow?
Yes, my colleagues and I are all scratching our heads trying to work out what it is that's going on, because everything is in rather a mess. In the past, one could rely upon progressive improvements in expectation of life. One could expect that the birth rate would remain reasonably constant between about 1.7 and 1.9 children per woman on average. Migration had stabilized at a very high level at about 250,000 per year, but it wasn't going up and down very much. And now suddenly the apple cart has been completely overturned. Mortality improvement has stalled. The birth rate has fallen to previously unprecedented low levels. Migration has shot up to incredible levels recently of over 700,000 net per year. It's not very easy to explain all of this, and its consequences, of course, are potentially very great. But as we don't know in which direction the change is going to be for certain, I feel rather less useful than I'd hoped I would be.
Surely not. Of those factors then that you just mentioned, is it fair to say that the immigration levels are the most significant sort of factor changing the landscape potentially as we move forward over the next few years?
Yes, without question. And that's been the case for some time now, ever since the late 1990s. Immigration has, as it were, taken charge of the demography of Britain and to some extent of other countries as well.
Okay, let me turn please to Professor Reynolds. How do we even begin to factor in some of these demographic changes into how we do our retail? Is it too early? Is that a bit of an unfair question in the sense it's too early to even begin to consider that? Or are there useful things that we can say to possibly address this question?
Well, I think as David has suggested, this is quite messy, and actually there's not a one-line answer to that question, because actually it's going to vary enormously by a particular part of the demographic. But you could say that the retail response to all these considerations, maps onto the demographics. So it's to do with affluence, it's to do with longevity, it's to do with migration. The interesting thing, of course, and David can, I'm sure, comment on this more effective than I can, is really around the geographic differences between different parts of the country. So let's say between London and northern cities, between urban and rural areas in terms of the pressure on retailing. I mean, the piece that interests me particularly is around, you know, the impact of demographics on the creditworthiness surface, if you like, of the population, and the vulnerability of particular demographic groups to their debt or credit circumstances. I think that's a really fascinating area.
Let me just pop back then briefly to David. Is there anything that you could pick up on those themes, David, in terms of, you know, for example, geographic diversity in the country, one or two other sort of interesting factors of diversification?
Well, despite the very low birth rate very recently, population continues to expand quite rapidly and is en route for over 80 million before the end of the century, if things continue at the rate they were in the last few years. And that's not taking into account the enormous upsurge of the last couple of years, which has taken migration up to 700,000 net per year. And the great question is that going to come down to about 315,000 per year as the ONS expects, or will it remain considerably higher, as some believe? And that would have quite dramatic effects upon population size and distribution, and also, as you were saying a moment ago, the balance between town and country. It doesn't require a demographer to tell you how housing is mushrooming out around lots and lots of small towns and medium-sized towns in the countryside. A simple car journey will show that, never mind any statistics.
Sure. Well noted. Jonathan, could I just come back to you just to tease out, if possible, a couple of these credit concepts that you've mentioned? You've talked about credit worthiness, and you've talked about vulnerability. So before I sort of move to the credit industry experts for that, is there any way you can just flesh out? I think both of those topics are very, very interesting. Maybe if we just start with the credit worthiness point, and then
yeah, I mean, I think both those are of interest. I'm originally a geographer by training, so you know, most of my kind of talks have maps in them these days. But I'm really fascinated by. Often we tend to assume that, you know, there's a uniform kind of countrywide creditworthiness or attitudes to credit, and of course the industry has fantastic data in terms of knowledge of local differences. And I'm comparing places like Blackpool, for example, with let's say, you know, the Cotswolds. And thinking about some of those sorts of differences in creditworthiness, but also, you know, we also have some very good geographical indicators available on, for example, deprivation, different parts of the country, which tells us not only there's the north-south divide is a very crude kind of sort of division, but within our towns and cities we see very substantial differences, you know, between great polarization. Someone like Oxford, for example, you know, has a kind of a wealthy north and a rather less wealthy kind of south and east, and that affects you know, the kind of retail response and the kind of retail presence you might see there. I know we're straying into the next kind of topic on this, but sure. I think that geographical difference is quite important.
Well, what is the most stark differentiating factor then? Is it rural, urban, or, you know, income above a certain level, below a certain level?
It's absolutely income.
Right.
You know,
Okay.
I mean, I think clearly, you know, and of course, it's leavened, as David has suggested, by migration. So we think about what are the characteristics of in-migrants compared to the resident population. I think I'm right in saying they're generally younger, and you know, perhaps less well financially established initially. So, you know, there are kind of circumstances around the demographics which are really interesting in terms of the impact on the availability of credit to those individuals, and also on the kind of retail response that you might see within particular areas.
Okay. Can the guys at the CSA then just pick up on this point? I mean, it's slightly unfair because you're more in the business of actually collecting, but in terms of credit worthiness, Claire, maybe if I can come to you first. Is there anything that you want to pick up on some of these general points about demographics that we've started to talk about, and how that might sort of play out in terms of some of the different trends that we're seeing between different types of community, different areas, and this whole issue of creditworthiness, how that might start to be impacted upon?
Yeah, sure. I think Jonathan's absolutely right that there is a demographic within towns and cities as well, and we certainly see that. Well, certainly our members see that in the collection space. I think that there are changes in patterns of payments being made. There's very few full and final settlements being made now. There's a lot more payment arrangements being made. We see a lot more token payment arrangements that are being made, which could be, £1 a month and that kind of thing. So, and that very much comes from, again, to Jonathan's point, very much comes from the income. I think the people that our members deal with, they're already in financial difficulty, so their credit worthiness is a particularly low level anyway, because if you've got one, if you're in arrears to one creditor, it's a high likelihood that you're in arrears to several other creditors that you've got. So I tend to agree with Jonathan there. Certainly from a credit worthiness perspective in a collection space, it won't be very often that somebody that's in arrears or in a debt collection cycle would be applying for a great deal of credit anyway.
I think one of the really interesting points, isn't it, is how past payment performance impacts on future credit worthiness. Is that something that you're trying to look at? Like a
very, very, very much so. So it's something that actually we've been in discussion with one of our members with PRA as well. Is that you have an individual who has suffered financial hardship in the past, but is making regular payments via a payment plan, but that's not reflected in their credit file. Actually, all the creditors see is that Claire Ainsley once had arrears 3 years ago and she missed 4 payments, so I'm not going to give her the loan that she's applying for. Actually, credit files should be real and up to date, and if you are making regular payments to a debt that you may have racked up quite some time ago, we believe that should be reflected, and that's a truer picture of the credit worthiness of that person, rather than going back over a 6-year period at the occasional missed payment here and there that prevents people from actually obtaining credit. So it is something that's very much high on our agenda at the moment.
Is that true, or were you just using that as an example?
No, that's true. That's very true.
Okay. Fair enough. We are being recorded. Right, Russell, did you want to add anything? I mean, carte blanche, if you like.
Yeah, just to kind of reiterate what Claire was saying there as well, that's kind of trends there. You're saying about the demographics. Also, we'll probably come to speak to this later about it, is what we do find is the kind of younger demographic, they tend to use the digital strategies to self-serve, the non-contactless, where you see the kind of older demographic and people that are not much tech savvy, they still prefer to pick up the phone and speak to people. But I'm sure we'll cover that more later.
I mean, Gerard, I'm assuming that picking up the point about the increase in migration and migrants coming in, they won't have a track record of creditworthiness with them. So how does the industry kind of tackle, in a sense, those that arrive with a blank sheet of paper in terms of their creditworthiness? Is a really interesting point. If that's going to be an increasing part of the population,
is it even laughable to suggest that they might have some sort of previous record? Jonathan, I mean, is it yeah.
Oh well, I'm asking the question because I don't know the answer. I'm assuming that but depending on the nature of the migration, if they're professional migration, moving into the country with work-based visas and so on, that there'll be a transportable credit record of some kind that comes with them. But I'm not an expert in that area. But it's just, if you're seeing an increase in that proportion, then perhaps it's more difficult to assess their creditworthiness as a consequence of their international movements.
Sure. Now, I wanted to.
I'm so sorry, Gerard. James, did you want to comment? I can see your raised hand.
James, James from Experience. James Jones, welcome, sir.
I thought I should chip in, really. So, hi everyone, I'm James Jones. I'm from Experian. We run one of the UK's leading credit reference agencies, and we do quite a lot of work looking at exactly the type of issues that that are being discussed this afternoon. So we've been looking at the so-called credit invisible problem for a number of years now. There are currently, we reckon, just under 5 million adults in the UK who have insufficient credit history data to be fairly assessed upon. And it is a big challenge. And, you know, a chunk of that is people arriving in the UK from overseas. And credit histories do not travel. We have different architecture, different laws. So there's really no sort of facility to transfer credit histories across borders. So people essentially start from scratch, and it can be incredibly challenging. So it's certainly something that we prioritize through our public education outreach, working with, for example, refugee charities. It's a similar challenge, obviously, faced by people when they hit the age of 18. But I think the system is maybe primed a bit better to support people through that process. So if you go off to university, then obviously, you know, the banks are competing for your customer, and they have student bank accounts and things, which I'm assuming you know, the criteria is forgiving in relation to a lack of credit history, and then you'll probably be marketed with a credit card. University will encourage you to get onto the electoral register. You know, the stage is set really to help people get a financial track record created, but I think it's more challenging for other groups.
Okay, just before I move to Paul, our sponsor, David, is there any other sort of insight you can provide on, you know, what we know about people who are moving into the country? You know, what at all do we know about potential, you know, financial histories, transaction histories? So is that something that you've covered at all?
Well, the two things occur to me. I know nothing about their financial background or history, but two things do stand out, I think. The pace of migration in the last 25, 30 years has been such that despite the fact that ethnic minority groups are now very well established in Britain, still about half of the members of ethnic minority populations in this country were not born in Britain. That's because the pace of migration just keeps on refreshing the number who are born overseas. That must have some bearing upon the topics that you're talking about.
Just chipping in very briefly, how many people does that equate to, roughly?
Well, let me see now. There's about 10 million people, or rather more, in the ethnic minority populations, of whom half would have been born overseas, very, very roughly speaking. It depends on which group you're talking about.
Okay, so that's a lot of people. Sorry, your second point, if you
yes,
can.
The second point is that the pace of migration, high now for 2.5 decades, has been hotting up recently, and that means that the proportion of the population who fall into the categories that you're interested in is getting large and will become eventually much larger. I made a projection published in 2010, suggesting that the minority populations, white and black, would become a majority in the population sometime after about 2070. Recent trends suggest that was likely to happen by 2060 or thereabouts. That's quite soon if those projections are right. All projections, of course, are always wrong, but I don't think they can be that badly wrong, given the scale of migration and the relative change of the birth rate.
So we need to keep quite close tabs. And are we confident about the way in which we are just mapping the numbers, our grip on the numbers? Do we, in your opinion, know what's going on, basically?
Well, we just had a census in 2021, which has pinned the numbers for that year reasonably firmly. What happens afterwards is more difficult, because the migration measuring system has been in great turmoil since 2019, really. The old system, based upon the International Passenger Survey, has been scrapped. A completely new and different system based upon administrative data has come in, which may prove proved to be more accurate, at least insofar as it tells us how many people have actually come, as opposed to those who simply say that they intend to come for a year or more. On the other hand, the detail which that has yielded so far has been very, very slight and sketchy. Overall numbers we have, but where people come from in detail is at the moment, much less good than it was with the International Passenger Survey, despite the well-known weaknesses of that particular survey.
Okay, thanks for that, Paul. I'm going to turn to you now. There's a lot to potentially get your teeth into in terms of the immigration levels. That seems like there's a huge new potential, well, marketplace that we need to communicate with and get on board. I mean, you know, if we can in some way sort of blend that into the sort of this theme of digitalization that was also mentioned as well. I mean, you know, take up. You don't have to stick purely to the immigration point, but you know, the floor is yours for the moment, sir.
Okay, thank you. I think the migration point is very, very valid, especially when it comes to contact strategies. Language, first language, probably predominantly not English or a great strength in it, comfortable with it, so that gives rise to more digital solutions. There's more tech available now for conversational platforms via email or web chat or text message or any social media where you can do language translations for the agent. So there's a lot more depth in the last sort of 3 to 4 years to engage with people where English isn't their first language or language of choice. So I would certainly raise that as a point for migration. We touched on a point on vulnerability earlier. We actually see a higher engagement on digital services with people that are classified or tagged as vulnerable via the platforms. We did an analysis with a debt collection company from October 23 to December 23 on a government agency contract. And they'd identified around 20% of the callers by telephone as vulnerable for whatever reason they were identified, but actually 60% by digital methods, which really says two things to me. Number one, digital is extremely valuable for people that just don't want to pick up the phone, whether that's because of mental health reasons, anxiety, embarrassment, whether they can't contact in those sort of 8 till 8 traditional working hours. And number two, the real need to provide that channel, to have those sort of channels available so your customers can communicate in a manner that they feel comfortable. Those are really the key aspects I took out from that metric.
Okay, thanks for that. Let me just pop back then to Jonathan, because Jonathan, I think, raised initially this question of vulnerability. You know, how are we sort of beginning to get to grips with that from a retail point of view? And is that to me, it seems that that's something that we should address right at the outset when we're trying to get customers on board. That's when we should be taking into consideration potential. Is there anything you want to sort of say to that, to flesh that out a little bit, please?
Yeah, surely. I mean, I think, in fact, James has just posted a link to a map on Experian, which is, I'm glad to say, bears out my anecdotal example of Blackpool and the Cotswolds. In fact, the Cotswolds creditworthiness score is exactly the same as mine, which is quite good. But on the vulnerability point, on the vulnerability point, I think you know, we have some really interesting issues for retailers, because retailers have access to this kind of data, this kind of geographic information, and they're thinking about what business model is going to work in a particular area. So if you're an Aldi or a Lidl, you're going to be thinking about different geographies and different locations for your stores, different strategies and business models. If you're a discount clothing retailer, you know that you're probably going to be dealing more with cash, relatively, compared to credit in some locations, because with the economic crisis over the last few months and inflation rate, then more people have been thinking about paying in cash to manage their incomes more transparently. So if you're a retailer, you're very much aware of the differences in in consumer vulnerability. I do a lot of work with companies that are using the kinds of tools that James has shared and others, which focus at a very granular level on the deprivation and the vulnerability of consumers in particular locations, which affects not only the format of the store that you might put in there, but also the propensity to offer credit, also the propensity to have particular kinds of products on shelves, for example. Comparing Waitrose type locations with Aldi type locations, comparing Primark type locations with, let's say, Hugo Boss or high-end clothing retailer locations. So retailers are very sensitive to some of those local differences in demand, whether they're operating physical stores or whether they are operating online activities.
Okay, let me come into the guys to CSA, who I'm sure will have something to say about vulnerability. Maybe Claire first. How frustrated are you when you find that there's somebody in a vulnerable position that you're trying to collect money from? Is it something that needs to be addressed much earlier in the credit cycle? And what progress at all, if at all, are we making in trying to sort of bring that about?
Well, I think huge steps have been made, and I think it's well documented or commented on that, certainly the debt collection and debt purchase sector has got a very strong grasp on dealing with people who are vulnerable, more so than I would say retail, because you want that credit card or you want that loan because you want to buy that dress. It's a completely different scenario when you're in a debt collection situation. So we tend to find that our members are able to identify vulnerabilities quite early on in the process. But I do have to caveat that with providing the customer engages. So if you have a customer that you're trying to communicate with and they're completely disengaged, you're unaware of any vulnerability at that point. And it's not until they do engage and you are made aware that you can, change your collection strategy or change your communication strategy. So really, engagement is key. But certainly huge strides have been made around vulnerability. We've got the FCA's guidance on it. We've got the CSA's code of practice that also includes vulnerability. So there's a lot of good work that has been done there. I'm not saying that the problem is solved, because there are still people that have vulnerabilities that are under the radar, but certainly we're in a very good position to be able to identify those individuals when they're engaged.
Just before I turn to Russell, Paul, can I just come back to you quickly on the whole psychology point of when you're in debt, when you're in a difficult situation, you don't want to talk to a person. So we're sort of saying really that tech, that digital is the best way to deal with that situation. Is that a fair point? I mean, anybody can chip in on that, but
potentially. I mean, as Claire said there, I think the DCAs and the industry as a whole work fantastically well for vulnerable customers. Number one, probably the best that I've seen and worked with. They really do understand it and have it at the forefront of their mind. That said, customer does have to engage. That is the thing. You put your mindset into somebody who's gone into debt. This hasn't just happened overnight for them. They've been living with it for weeks or months. I think, as Claire alluded to earlier, it won't be just one company that they're in arrears with. It'll be multiple companies. It'll be multiple different letters from different agencies or organisations. So this has gone on for some time now. Some small minorities can sort of grab the bull by the horns and ring up and are confident enough to say, "Look, this is where I am. This is what I can do," and that's it. Quite a lot will sort of go quiet. Perhaps for whatever reason they've not processed it completely, or embarrassment, or lack of education. Thinking of the first time in debt, and it's a big scary industry, and it was how it was maybe 30 or 40 years ago, and that's not the case. So you do in many instances need a call to action. An organisation needs to start that engagement, whether that's an outbound call, a print post letter, or something digitally. Once that call to action has been given, then you'll find out how your customer's going to respond. Just going back to that analysis that we did from October to December, 50% of the money, the revenue that was sort of collected came from inbound calls. So that tells you straight away 50% of the people that you've done a call to action to, a letter or a text message to say, hey, we need to speak to you regarding this debt, this arrears, have called up. But at least 50% not calling up. And then we need to break down, what works there. In this instance, 6%, 6.4% engaged when the DCA made an outbound call to them. So proactively called them, spoke to them, and perhaps explained the situation. Wasn't quite as scary as they first thought, and they were there to do a resolution. 15% of those customers engaged self-service, straight to the organisation's website, didn't want to speak to anybody. Potentially a huge amount of that traffic is out of hours, out of the traditional 8 to 8 hours, and they dealt with it themselves. They understood, they've gone online, they've either made a settlement payment or in many cases proposed an amount that they can afford every month, or have completed some sort of financial assessment, some sort of income and expenditure, and got the conversation started. And then you've got around 13 to 14% that have engaged in other ways. A very small minority by a web chat. They've gone onto the website and they've just engaged straight away with an agent. And a high proportion, double that of outbound calling via two-way text message. And again, it's about providing this convenience to customers.
Okay.
I personally think digital works because of why the explosion in the last 4 years. Obviously COVID has helped, and that's helped organizations shape their digital strategy out of need. The fact that there's more providers out there, such as ourselves, who can amalgamate numerous forms of digital conversations and make that easier to integrate with organizations and customers. But also vulnerability. A huge proportion who are engaging in digital services are deemed or tagged as vulnerable over the telephone.
Okay.
Paul, could I ask just to expand on that a bit? It's a really interesting area. We've seen a large growth in digital communications of this kind. Do you think that those particular demographic groups feel more confident or safer talking to an avatar or robot or communicating digitally than they do out of talking to a human being?
I think in many cases, yes, Jonathan. I think they do. I think there's just a few aspects. They feel more comfortable sending either an email or a text or a live chat. It's sort of less human interaction. And number two, convenience. I think by the time they've settled down or they finish their day or whatever, they're getting now to the personal thoughts of the situation they're in. It could be 10, 11 o'clock at night. When we analyze the traffic on our website, people are making payments at 3, 2, 3, 4 in the morning, regular, making payments on Christmas Day, believe it or not, going online and then self-serving their debt on first instance on Christmas Day. There really is sort of no pattern to when somebody will communicate. That's why I think you have to have all the options available. It's sort of a catch-all scenario.
Is that okay, Jonathan? Because I wanted to bring Russell in. I just wanted to sort of pin in the potential point. I think the FCA was mentioned by Claire. Is there anything more that we want to add to that, Russell, in terms of do's and don'ts for customer communication, the way that we treat our customers, especially in this sort of this debt situation?
Well, so the FCA and indeed the CSA with the Code of Practice make it clear in our customer communication. I think that it's a complete 180 for, say, 10 years ago, when the communication was to get the customer to pay, whereas now it's more about getting the customer to engage with ourselves. And there's the the free debt advice signpost in the majority of our communication there, especially for customers who are in a financial vulnerability, but people that may be in a medical or a health vulnerability and everything. It is just more to encourage them to engage with us, let us know about it, and then we can work with that customer and point them in the right direction, or our members can point them in the right direction of what they can do, whether it be giving them forbearance on their account for a period of time, or signposting them to the relevant help that's with them. Unfortunately, with the FCA, we can't give debt advice, or our members can't give debt advice, but we can certainly point them in the right direction of where they want to go to. And if that, the engagement, the customer communication, it should be all about the engagement and make sure that they're not worried to contact or apprehensive to contact us. So I said there with the digital strategies and the self-serve, that removes that fear factor, and they can go in and do it in there. And there is a signpost on the websites, etc., for the free data advice and the places that can help there.
Jonathan, just briefly, so we've heard about the channels and we've heard about the bits of regulation. Is there any point that you want to make there, potentially trying to link those two points together?
I think what's really interesting is the growing use of technology in communications in this area, and everyone is experimenting. I think we probably all saw the press release from Klarna in February talking about their experience with their avatar, how they'd actually managed to replace a number of, to their financial benefit, a number of conventional call center calls with interactions with the avatar over text message. I think claimed they'd save 40 million or something in the process. I think, given the shortage of skilled and semi-skilled labor in this area and the falling cost of technology, I do think, and what we just talked about in terms of the nature of the customer that you're talking to, digital engagement would seem to be a winner in respect of certain groups that otherwise would be hard to engage with.
Okay, I think for the final 5-10 minutes, then we're just going to sort of look ahead a little bit. I mean, if anybody desperately wants to make a point that's being missed, stick your hand up and we'll blend in. I'm going to come back to David then. How do we begin to manage the different demographic challenges that we face at the moment? We've described it as messy earlier on. We've described it in a bit more detail what that means. What as a society do we do to ensure the smoothest possible sort of future now, so that we move out of these choppy seas, and then we'll look briefly at the sort of retail and information needs and try and wrap it up.
Well, faced with the low birth rate, less than 1.5 children per woman, according to present day estimates. Of course, that's only a snapshot, and it can change quite rapidly. That brings in its train potential for quite serious population aging, which immigration won't entirely rectify. And we wonder what's wrong, which means that people are having so many fewer children than they keep saying they want to have. I think there are two reasons. One is that the situation is particularly unpropitious of childbearing, with the cost of living, with the housing crisis, all sorts of uncertainties in the economy. So it is perfectly rational to put children off as long as people have them eventually. If they don't, then we're in trouble. And governments can't force people to have children. They've got to arrange things to remove the obstacles which stand in the way of realizing their desires. The question of migration is a huge one. No government seems to be disposed to regulate that or reduce it substantially. If that doesn't happen, then the population will continue not only to expand in numbers, but also will change in its characteristics really quite rapidly. And perhaps I could correct some numbers I gave earlier on. The number of immigrants in the country is about 10 million. The minority populations, including white minority populations, whites who don't identify as British, is rather more than that, about 15 million, and getting on for a quarter of the population now.
Okay, thanks for that. So just picking up, how do we even begin to formulate coherent retail strategies, Jonathan, over the next few years? Or
yeah, well, I think retailers themselves are. I was at the World Retail Congress in Paris last week, and the consensus was, about half of retailers are thinking about redesigning their business model in the next year. There's still this focus on value. The price increases from high inflation last year have become kind of baked in, despite the fall in inflation rate that we've seen in the last couple of months. And that means that shoppers are focused on value. It's meant an uptick in the use of cash amongst certain groups in the population. But it's meant that any retailer that's not price focused not thinking about how to manage their costs is going to be in trouble. That, together with the impact of geopolitical uncertainty on supply chains, international costs, climate change affecting commodity prices, means that this retail sector is actually, not in great shape. There's real polarization between winners and losers. And if you're stuck in the middle somewhere, you have some real difficulty. And credit within the retail sector has been, companies issuing their own credit cards have been falling quite significantly over the last few years. And the kind of buy now, pay later kind of model, or the discounted prices model as we see in places like Tesco and Sainsbury's, if you have your loyalty card, are the kind of the immediate responses strategically to the economic pressures that retailers see consumers are presently under. And that affects, there's a domino effect. Talk about housing prices, the effect on mortgage rates from the recent interest rate increases has a domino effect on discretionary spending. And as we started off, by talking about, well, does that mean that people will borrow in order to buy the thing that they really wanted to get in terms of discretionary spending? Or will they bide their time, be patient and wait till they can afford to pay for it in real money rather than in credit terms? So I think there's some really interesting behavioural changes that we've seen in the last year or so. Whether those will unpick themselves as economic conditions improve, I think will be very interesting to see.
I want to turn quickly to James at Experian. This point that you made about credit histories don't travel at all. I mean, is there anything that we can do to help facilitate international cooperation on that sort of information stream? To get countries working together to enrich what we know about customer spending habits, paying habits, as much as we can.
That's a good question, Jared. I mean, I think that would be a huge challenge, and I suspect there are probably easier solutions these days using things like open banking to simply help people more quickly gather together enough evidence of their responsible financial behavior to feed into a credit decision, rather than sort of reverting to trying to port over kind of traditional credit bureau type data. Experian launched a couple of years ago an open banking driven service called Boost, which with the individual's consent will look into their bank transactional data and import certain additional variables into their Experian score calculations, such as payments to council tax, which we don't gather. I think, and that can be a help, but I think there's more we can do. Our colleagues in the US actually a few years ago launched something they called Experian Go, which is a product entirely designed to help people establish a credit history for the first time, including if they're new to country. So I think that's, and again, I think that utilizes open banking as well as some tried and tested processes working with partner organizations in the lending industry to help fast track people opening accounts. So I suspect that's probably the likely direction of travel.
Okay, just say 2 or 3 minutes, please, on open banking. How useful has that been to enrich your sort of data source, data for members?
Debt collection agencies don't have access to credit data. So
okay.
No, debt purchasers have some access to credit data, but not all. It's because they're obviously not making lending decisions. They're looking at whether expenditure and income, if a repayment is affordable. So just touching on open banking, yes, as a consumer, I would be more than happy for my bank or for somebody else who I want to obtain credit from to take a look inside my bank account to see how healthy I am. When it comes to a debt collection situation, absolutely not, because I want to pick and choose who I pay first. And that's why open banking isn't, it's not commonplace certainly within the debt collection sector. I think some of our debt purchase companies might suggest open banking to some of their customers, but it's definitely not used in a debt collection situation.
You don't want that to change then?
Gerald, I can just add to that. So we're weeks away from launching an online customer portal that will be marketing out to third-party collections, and that has an open banking source in there. the point that Claire made is exactly where I stand on it. If you're buying a new car or some furniture, you don't mind giving somebody access to your bank account because you're actually getting something for giving that information. When you're in debt, you may very well not want to a collections company to have a look in there and see what spare income that you may have. That said, I think there's still quite a lot of buzz in the industry around it. I think some of the bigger banks on contracts are looking for DCAs to have it, or certainly to have that facility to offer it to a customer. I think it's one of those things that's still very early days. Maybe in 3, 4, 5, 6, 7 years, where more people are used to using open banking to get the product in the first place, then it'll become the norm. So I think anybody that's having it, and we're putting it on our platform, are very early innovators within credit and collections to have it. It's about educating the person to say, actually, you said you could afford £50 a month, but actually you can't. You can only afford £30 a month, or
Yes.
you can actually afford £60 a month, and this is going to bring the term of the debt down by X number of months for you to free and clear and start repairing your credit. So it has to be used as an education tool.
Very briefly, Russell, please, and then Jonathan.
Yeah, just taking a similar to reiterate what Claire has said, the open banking, it's a great idea, etc. There, but the reluctance for the consumer to give it, that's what's going to be the biggest problem, is getting the customers buy-in. Because you said it's like, well, no, and again, that's the perception of the industry where they'll just get in and they'll take what they want, as opposed to seeing it as the tool which is going to benefit them. They'll be able to vary their payments 1 month, where maybe they're struggling 1 month, and they can see that and say, right, well, we'll not take the payment this month, and we'll take 50% back to normal next month. But that's what it is. It is still early days on it just now, and there is still a lot of kind of red tape to go through, both with the customers for their buy-in, but also with the industry having access to it, as we said, because of the lending decisions is not something that we do.
Jonathan, last word but one, please.
On open banking, I think the issues are around kind of privacy concerns primarily, but also I think to some extent inequalities in access. Not everyone will have the kinds of bank accounts or digital facilities that allow them access to an open banking API or a third-party application. And those applications are quite inconsistent as well at the moment. So I think we're still early days in educating the consumer that open banking is not the privacy threat it might be in relation to debt.
Okay, David, I'm going to put you on the spot very, very unfairly for the last word. I mean, what's your sort of feeling about all the different things the different challenges that we face, all these various sectors, and how we begin to sort of weave in the changing demographics, etc., into trying to address those challenges?
Well, we haven't talked about family and household. If
Okay.
the birth rate remains at its present low level, that's going to make a big difference in the structure of households in the future, of the size of families, and therefore what sort of things people spend money on. Also, if it's true, and I'm not sure it is true, that an increasing proportion of young people vow not to have children at all, then that's going to make a big difference in the distribution of people living by themselves, living without dependents, living without support, and also without responsibilities, which may have very big implications for expenditure, I'd have thought, in the future, and savings and everything else.
That's great. We're going to move on to the survey. Was there anybody who wanted like a final word, or is that it? Have we done? Speak now, or forever stare at your laptop. Right. Okay. So thanks for that. We are now going to move on, if we can quickly, please, to like a 4 or 5 minute feedback session time, where we just provide some quick feedback on what we've just been through, and whether there's sort of mileage in doing this sort of discussion, focusing on customer communications in the future. So what we want you to do is use your phones, if that's possible, and you go onto menti.com, shout if you get stuck in any sort of way from a technical point of view, and then you type in the code that we've got there, 14336003. You join that, and then that should sort of bring up a page on your phone which hits with the words feedback time. I'm not sure how many people are pursuing, but anyway, let's just go for it. So we have the first of, I think, 10 questions. And if we just sort of like wait for like, you know, maybe 10 seconds per question. Okay. Okay, well, that seems to be reasonably complete in terms of getting some feedback. I think we're getting about 10 or 11 people there. So thanks for that. So I think we can now move on to the next one, Anna, please. Any particular point of interest? I think you've got like 3 boxes to fill in words. I think, you know, just something that's very brief, maybe just fill in one of those boxes. Are you with me, David? Are you able to? Okay. So we've got like, okay, so there are some more phrases coming in. And I think we can sort of store this data like anonymously, of course, to just sort of ponder things in the future. So, okay. That's quite snazzy the way that it sort of does that. Wow, so we're getting quite a lot of feedback there. And I think people benefited from just having a few extra seconds. So, okay, I think we've got 10, 15 responses. So I think we'll nudge on to the next one, please, Anna. So can we repeat this in the future? Can we repeat this session in the future? So that should be a pretty simple yes or no. Okay. Well, looks like the ayes have it for the minute. Jury of 12 as it currently stands. Okay, that'll do. Next one, please, Anna. Can we make it an in-person event? So this is what we've been like bumming and ahhing with for the last few years. And I'm going to say yes. I know that's me, that one, yes. I definitely would like to meet people. Okay, well, the jury's sort of on that one. Next one, please, Anna. So either way, how long should it last for? So if we are going to discuss this whole theme of customer communication, you know, what's the sort of appropriate level of time? So yeah, I mean, I think we were trying to cover quite a lot today with this session. I think we could have probably broken it down into 3 or 4 sort of sub-sessions. So that's sort of been reflected anyway. Next one, please, Anna. So how many people make a good sort of panel generally? Yeah, I quite like to listen to quite a lot. So okay, so we're basically talking about repeating pretty much the same format for today. Number 7, right? How much would you as a potential delegate, a bit of a dirty question, how much do you would pay to come to an event? And I guess that's in either situation where it's either webinar or, well, I guess actually that's more in case it's an in-person event where you're talking about venue fee and lunch and whatnot. So okay, so people do like free, but common sense idea. I guess it doesn't really matter as long as it's good. Would you exhibit? Would any of your organisations consider exhibiting? Okay, an event like this. Okay, I guess that just gives us food for thought. We've got a couple of questions left. So next one, please, Anna. That's okay. Would you nominate for a Customer Comms Award? Is there value in us sort of recognising organisations that are reaching out to customers, however they're sort of doing it, to sort of say well done to that particular industry? So that's the penultimate one. So the last one, I guess there's 2 ways of sort of asking this. What would you wish to nominate for? If you were to nominate for an award, what would that be for? I guess another way of asking that question is what makes for good customer communications? What are the things as an industry that we should be sort of focusing on in the future? And then I guess if we just sort of leave that for 30 seconds or so, it's top of people's heads. Let people. So right, well that's very, very interesting, and we're very grateful for all the feedback. We can sort of capture that. I think that pretty much wraps it up, unless there's anybody who had a final comment. Anybody at all? Paul, do you want the ultimate last word?
I have no other than things to add to it.
Okay.
But thank everybody for their attendance. Thank you for the panel. I'm
so grateful to everybody for joining today's session. It's a great industry, very challenging times ahead, and I think hopefully we've had a good range of perspectives to help us steer the way forward with our telecommunications and so forth. Okay, I wish you all the best. Enjoy the spring as it takes shape. Hopefully gets going a bit more. See you next time. Thank you.